Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Guoquan Food Shanghai Co. Limited annual report. And Guoquan Food Shanghai Co. Limited offers a diverse range of products and services to cater to the needs of its customers. The company's product portfolio includes ready-to-eat, ready-to-heat, and ready-to-cook meals, as well as at-home prepared hot pot and barbecue ingredients. In addition, it provides condiments and sauce products, beverages, fresh food, and Western food and snacks. The company also offers a variety of other products such as barbecue products, solo dining meals, hot pot soup-based products, meatballs, shrimp paste, meat, vegetables, and pots and grills. Furthermore, Guoquan Food Shanghai Co. Limited processes and sells aquatic products, providing customers with a wide range of options. In terms of services, the company offers supply chain management, information technology, and enterprise management services to its clients. These services enable businesses to streamline their operations and improve efficiency. With a strong online presence, Guoquan Food Shanghai Co. Limited sells its products through both physical stores under the Guoquan Shihui brand and digital channels, making it easily accessible to customers across mainland China. The stock price of Guoquan Food Shanghai Co. Limited has skyrocketed over the past year due to a combination of positive news events and strong financial performance. One key factor contributing to this surge is the company's robust annual results, with operating revenue increasing by 20.7% year-on-year and net profit surging by 88.2% year-on-year. In addition to its impressive financials, Guoquan has also made significant strides in expanding its retail network, adding over 1,400 new stores throughout the year. The company's focus on digitalization has also paid off, with the number of registered members reaching 64.9 million by the end of 2025, a 57.1% increase year-on-year. Furthermore, Guoquan's share buyback programs have signaled management's confidence in the company's future prospects, potentially boosting earnings per share and contributing to the stock price surge. Analysts have also endorsed the company, maintaining a buy rating due to its leading position, strong replicability of franchising, and advantages in supply chain integration. Overall, Guoquan's strong growth, increased profitability, and strategic expansion have all contributed to its impressive stock price increase over the past year. Guoquan Food Shanghai Co. Limited maintains a market capitalization of 10 billion, broadly in line with the industry peer group. Guoquan Food Shanghai Co. Limited trades at a higher price-to-earnings ratio of 28 times and a higher price-to-book ratio of 2.93 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 31% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has grown consistently, but operating income growth is weak or inconsistent. Equity expansion may be driven by financing activities rather than core business profitability. The company has consistently reduced its share count, while revenue and equity have grown, indicating disciplined buybacks that enhance long-term per-share value. The company have a dividend yield of 4.16%. The income statement shows that the company have been growing its revenue annually, and the operating income have been increasing. This shows that the business model works and the business is expanding. The company comfortably covers its interest expenses through operating income and maintains a strong cash position relative to current liabilities. The primary drivers of revenue growth or decline can be identified through a thorough analysis of the given data. On the growth side, several factors contribute to the increase in revenue. Firstly, the expansion of franchise stores and online sales networks have led to a significant year-on-year increase in total revenue. The introduction of innovative store formats, such as Guoquan Stir-Fry and Camping, has also contributed to revenue growth. Furthermore, the development of overseas markets and increased R&D investment have enhanced the company's innovative capabilities. Additionally, the implementation of a membership program has led to a substantial year-on-year increase in registered members and value stored in prepaid cards. The organic integration of online and offline sales channels has also boosted revenue. On the other hand, factors contributing to decline include service income and other income and gains, net, which have decreased significantly. The company's reliance on franchisees for sales has increased, with 79.6% of sales coming from this channel in 2025, compared to 84.2% in 2024. However, the proportion of sales from other channels has increased, indicating a diversification of revenue streams. Overall, the growth drivers have outweighed the decline factors, resulting in an overall increase in revenue. The net income of the company experienced a significant increase, rising by 88.2% from RMB 141.2 million to RMB 453.9 million between two consecutive years. This upward trend continued in the following year, with an additional 0.4% growth, resulting in an overall increase of 88.6%. On the other hand, profit margins showed a mixed performance. The gross profit margin decreased by 0.3%, dropping from 21.9% to 21.6%. However, the net profit margin IFRS and core operating margin non-IFRS both experienced substantial increases. The net profit margin rose by 55.1%, reaching 5.8%, while the core operating margin increased by 22.9%, reaching 5.9%. These contrasting changes in profit margins suggest that the company's revenue growth was not entirely reflected in its gross profits, but rather in its ability to maintain and improve its net earnings. The company's financial performance indicates a steady increase in its ability to generate cash from its core operations. The data shows that the company has been able to produce positive operating cash flow with an amount of RMB 588.4 million in 2025 and RMB 530.9 million in 2024. This trend suggests that the company's business model is generating sufficient funds to cover its operational expenses, indicating a healthy financial position. The company's financial health has undergone significant changes over the past year. A notable increase in debt level is evident, with a staggering rise of 105.9% from RMB 67.5 million in 2024 to RMB 139 million in 2025. This substantial growth in debt has led to an increase in interest expenses, which have risen by RMB 1,356 from RMB 4421 in 2024 to RMB 5777 in 2025. These changes indicate a significant shift in the company's financial position, warranting closer examination of its debt management and interest expense mitigation strategies. Management is optimistic about the company's outlook, citing the franchise business model as a key driver of revenue growth. To achieve this goal, they are expanding store presence, introducing new products, and integrating online and offline sales channels to increase customer engagement. Additionally, they are focusing on increasing corporate customer sales to boost revenue. In terms of strategy, management is prioritizing maintaining a healthy capital structure through adjustments based on economic conditions and asset risk. This approach will enable the company to adapt to changing market conditions while minimizing financial risks. Overall, management's strategy is centered around driving growth through innovation and prudent financial management. The company's financial activities have been transparent in their annual reports. On the matter of shareholder returns, the company has taken a dual approach. Firstly, they have paid out dividends to their shareholders, as evident from page 24 and page 28 of their report. This indicates that the company is committed to rewarding its investors through regular cash distributions. In addition to paying dividends, the company has also opted for share buybacks. As mentioned on page 28, this strategy allows them to repurchase shares from the market, thereby reducing the outstanding share count and potentially boosting earnings per share. By doing so, the company demonstrates its confidence in its future prospects and its desire to create value for shareholders through alternative means. Concerns about inventory buildup and supply chain disruption have been raised in recent assessments. The presence of yes responses to inventory buildup concerns on pages 9 and 12 suggests a significant issue. Furthermore, the increase in impairment losses on inventories noted on page 22, Roman 2, indicates potential problems with inventory management. These findings collectively point to a pressing concern regarding inventory buildup and its potential impact on supply chains. That concludes the financial summary for Guoquan Food, Shanghai Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.